Hi, welcome to the market alert for Thursday, the 16th of October 2014. And as you can see from yesterday, we had a very volatile day. This price action is characteristic of a market bottom being put in again, along with the implied volatility pattern that you will see in just a moment. So we had a massive range yesterday. You can see there's 50, 100, 150, 200, 250, 300, nearly 350 point range for yesterday. Now, because the size of these bars, if you look at the opening session alone, each one is over 50 points in range. And of course, when we restrict the bar length down to 20 points, it's very difficult to actually get any signals. So yesterday I had to double the volatility inside of the trade mark up to 40 to actually pick up a signal. Now from this point forward it should calm down because of what I'll show you in the daily chart in a moment, but because of the incredible volatility yesterday, this is what the setting had to be in order to overcome the amount of volatility to actually produce a potential signal. So there's just the one signal there, but it had a risk of over 40 points on it just to get that trade in. Let's just show you what it is in its entirety there. You can see there 59 points just to get, just move that down to the low, the maximum there of 60 points. So you can see the sort of range that the market was trading in yesterday, and the volatility did calm down a bit around 1650, about 5ish, and then of course into the evening session we saw the market turn around and move back to the upside. And again you're seeing this range here of around 40-50 points for the range of the bar, and then eventually the market making its way back up, and this one particular bar here alone is over 100 points in its range. So a very volatile day, and if we just have a look at the daily chart, you'll see why. We've got this huge bar, the market coming off the lows. This is the bottom of the market for the time being. This is characteristic of stopping volume. It's a climatic price bar, and you can see the market's up on the overnight. So the long side now is likely to be the best side. Let's just have a quick look at the news before we have a look at the implied volatility. We've got some news out at, let's have a look, from 1:30 an hour before the session, but at 2:15 we've got industrial production, capacity utilization, and at 3 p.m. we've got the Philly Fed as well. Now this is forecast to come out a lot lower than the previous, and this could have an impact as well. So if they want to drive the market back down to retest these lows, just be aware of it. But we are seeing a lot of volatility for yesterday, and as I say, this after 20 odd years of watching the market, this is characteristic of a market bottom being put in place. Does it mean to say the market won't go lower on a daily basis? Of course not. But this is likely to be a sideways pattern from here until the market can re-establish itself. We've had a major drop in the market. We just have a look. We've gone from this high down to yesterday's low, 1,500 points from the high of mid-September, just over a month, or just under a month. A 1,500 point drop there, which is around 10% correction for where the Dow was 10% correction. So the market's pulled back quite a bit there, and what will be interesting to see how far it actually manages to move to the upside before any selling comes back into the market, if it's going to do so. So on the implied volatility front, you will see way past 18, and again the figures aren't working in this. I'll just try and see if we can get some figures, but at the moment this doesn't seem to work, which is really frustrating. Here we go. What have we got here? There we go. We managed to pull this up. So we've got 19.49, which is great. We were actually over 100% implied volatility from the mid-October low there, which is just below 10%. And if you've not seen the video on the implied volatility, then you should do, because now this has carried out exactly what I said it would do in the video, because that's what it always does. So we've got a very frothy market at the moment as far as the implied volatility is concerned. It's characteristic of a market bottom, and it's the biggest spike in volatility we've had for a long time. So the market at the moment is currently showing a potential market bottom there. Right, well, that's it from me for this morning. I will see you in tomorrow's market alert. Have a good day, and as ever, thank you for your support. And as ever, thanks for watching. I'll see you in the next one.